Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Tuesday morning, still a very, very rainy city here in Mumbai. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, folks.
Good morning.
Good morning. A very rainy Mumbai and a very angry US president and US administration. I don't think the smiles in Tianjin went down too well in Washington. So lots happening out there.
Are you sensing taco?
Not this time. I don't think so. No, there's too much at stake, too much optics, I think, at stake. And that's part of the problem. That's why we are at 50%, right?
But I thought maybe less angry.
It's
Based
on the
it's just a I'm just that's what I want to.
Surabhi, I don't disagree with you too often, but this time I think we are at the
I
opposite
hope
side.
so. No, I hope so. I hope so. I really hope. I hope you're right, and that we get. I mean, eventually there's a climb down. Absolutely.
Absolutely. Let's take it from the top then, right? And that's the question that I want to put out this morning, which is, if you just look at the Truth post yesterday, is it less confrontational? I think it is. Let's see if the market interprets it like that as well. Usually, it's basically a rant. How the tariffs are going to be in place for a long time, etc., etc., etc. But we'll not put out the entire thing, but just this part, right? And this is what he said. He said they, that is India, have now offered to cut their tariffs to nothing, but it's getting late. And that's the specific portion that I thought made so he kind of sort of left off at that point, which is that there's an offer for tariffs to be dropped. But I think it was always there from the Indian side. The bit about, of course, he started with the tariffs being high, Russian oil, etc., Russian weapons and oil purchases. But it just seemed to me, it to be a little less confrontational. We'll see. Of course, the comments, of course, also come after on the back of PM Modi meeting Presidents Putin and Xi. And, of course, President Xi in China, of course, is the big one in terms of repairing relations, etc. Peter Navarro, that is the top U.S. trade advisor to Trump, also had something to say. And we'll play that soundbite out in a bit. He said, that doesn't make any sense. And that was basically PM Modi meeting with Xi. I'm not sure what he was thinking, what he is thinking, that is PM Modi is thinking. So there is acknowledgement of what has happened with regards to the SCO summit, where PM Modi, President Putin, President Xi, of course, have met and have promised to kind of work together. That comment that we are not rivals, both President Xi and Prime Minister Modi. I think all of this has, of course, been taken on board and being watched very, very closely. And that's the reason why I'm saying maybe at the margin, there is, I read those comments a little less confrontational, but we'll see. Markets will watch headlines to see if these developments are turning more conciliatory. That's the other point. BRICS leaders, by the way, have scheduled a virtual meeting for next Monday to discuss Trump tariffs. BRICS was, to my mind, if you just look at what's happened over the last few years, non-existent. There was nothing really happening in terms of big developments, etc. But this grouping has also now been revived in the face of Trump tariffs. This is interesting. U.S. markets, of course, in terms of price action, were closed last night, nothing very much. Precious metals, of course, surged. Silver surged above $40 an ounce for the first time since 2011. Gold, of course, is on track to $3,500. It hit an all-time high. So that's precious metals out there for you. Lots of U.S. data this week. You got ISM data, durable goods, and, of course, towards the end, the most important, which is the jobs number, the non-farm payrolls report, which of course, comes around market open on Friday. Yesterday, of course, we got a nice rally, right? How much of it is positioning related? I think 60-70% perhaps is positioning reversal of the huge amount of short positions and, just a one-way kind of a market going the other way a little bit. And the indication, the reason I'm saying that, and F&O stats, Nigel will look at in just a bit, but the rupee hardly moved, 88.20. So while the Nifty did decently well, the rupee did not move at all. Auto stocks rallied hard, and we'll talk more about that as we go along. Of course, sometimes what happens is going into an event, which is like something like a GST, stocks remain bid, and post that, it's a different picture. But we'll have to wait and watch. IT stocks also posted decent gains. I'll just leave you with two levels. Supports, of course, are the recent lows, so I'm not going to put them out again. Immediate resistance for the Nifty is the 40-hourly exponential average. It crossed the 20-hourly yesterday, the first level we put out yesterday. So 40-hourly is now moved to 24,670. And then the 20-day moving average comes into focus, which is 24,694, very close by in that sense. For the Nifty Bank, the levels also come out. Again, I'm just going to put out the resistance numbers. Here, the 40-hourly exponential is 54,352, and this, to my mind, is a bit of a major hurdle, which the market will do well to cross from here. GIFT Nifty will give you a quick sense of how we are likely to start, and we'll, of course, pick it up from there. 7 points lower, implied open, so absolutely nothing on it. But, Nigel, the F&O stats, especially with regards to what happened yesterday.
Well, that's right. Actually, I could be horribly wrong, but I'm sensing a little bit of taco. So hopefully Trump eases out on that stance and hopefully the markets can move forward, because that is the single most important factor with regard to sentiment here in the Indian markets. Easing of tariffs is the key cue. Now, in yesterday's trading session, it was a good one, right? But the FIs, they were virtually absent because, yesterday the gross volumes were down by 25 to around 30%. If you compare it to the average of August itself, a little more than 30% actually, but take into account a couple of large trades as well, still the participation from FIs was down close to around 25% in comparison to averages. Remember, today is going to be an important Tuesday because it's the first weekly expiry for the Nifty on a Tuesday itself. It's been a short one. Started on Friday, have two trading sessions and already to expiry. But I'm expecting some bit of volatility, particularly in the second half of trade. We could see a couple of wild swings on this first expiry for the Nifty. So we'll keep that a watch on that. Well, in yesterday's trade, we're talking about the FI participation being down, but institution net figures, that's the FI and the DI, you put it together, well, net buying of close to around 2,500 crores or thereabouts. So that was a good number actually to get from the institutional participation. Moving to what happened with regard to the positioning in the F&O market. Well, the FIs, they are net short. They continue to remain net short. Yes, there was some very, very mild short covering. Some marginal short covering and some marginal long addition is what we saw in yesterday's trade. Though they continue to remain net short, so if you can get past those crucial levels, then you could be bracing for a bit of a short covering bounce. Moving to the PCR, that's one of the key indicators, right? Besides the FIs being net short, that coupled with the PCR at around 0.7 normally spells a bit of a short covering bounce. And that's what happened yesterday, right? We had a bit of a relief rally that played out. Now that PCR has moved up to around 0.87, and the reason that the PCR has moved up, because there was some signs of put writing in an uptrending market. So the 24,550 put, massive open is built up out there, premium at close to under 100 rupees. However, on the upside, 24,650 call, 24,700 call. Between them, they added close to around 50 lakh shares, which is the important resistance zone. So just to give you a level for today's trading session, well, you have crucial resistance coming in at around the 24,700 odd mark. And going by the options data, this is the crucial support zone, 24,400, 24,450. And the 24,700 mark is extremely important because if you just pull up the 20 as well as the 100 EMA, in that vicinity is where you have that crucial resistance zone. So that's important. One factor, though, that's going to stand out is the Nifty Bank. It's underperformed in the last 1 month or so, and that needs to give up its relative underperformance because that's been the rank underperformer in the last 1 month. That needs to come back to life, maybe get to around that 55,000 odd mark. It's going to be important because you can't have the largest constituent not participating. In terms of stocks that I'm looking at, MobiWick, that's the stock I'm looking at. Massive volumes yesterday. It's been a big underperformer this year so far, if you look at it from the recent highs. And yesterday, there was a clean out trade. So normally, you have seen some of these new age themes coming back into play, a clean out trade as well. Let's see whether or not the stock is good for more. I'll keep an eye out on this one for the next few trading sessions.
Well, indeed, a great pullback by the market yesterday, and one perhaps long overdue and a big sigh of relief for the bulls. The question is, can they build on that? Now, cues this morning across Asia are fairly thin. You don't have a major directional move on any of the markets. When yesterday it was a big down move in Japan and up move in China, today you don't have that. It's sort of thin trade. And you're seeing the Hong Kong markets, for instance, just about 0.25% on the upside. Japanese equities have also stabilized, which is why that implied open is very, very quiet right now. But let's say we had a trending up day yesterday. So quiet start and maybe a gradual build up could always be a great scenario. Well, we have two equity calls coming for you this morning. Let me take the first one. This is coming in from Rhythm Desai, who of course has been a big bull on the Indian market. Now he's saying the soft earnings growth patch that started with the second quarter of 2025 seems to be ending, but the market is not yet convinced. He says supporting a turn in growth is a dovish central bank, likely GST reforms, a good monsoon season, recovery in consumer confidence, thawing of relations with China, and likely improving capex. It seems, he adds, at least foreign portfolio investors are attaching more importance to the issue of Russian oil imports between the US and India. Rhythm says a final trade deal with the US, more RBI easing, signs of uniform improvement in high-frequency data, and slowing equity returns outside India could act as catalysts. So could we actually come together to a perfect amalgamation of all these circumstances? Rhythm certainly seems to think so. Well, we have another call coming in. This is from Pratik Parekh of Nuvama, who says that historically narrowing US current account deficit in 2008, 2011, 19 slowed earnings all over and sapped sentiment. Ironically, he adds, domestic cyclicals were worst hit. He says markets revived only after 10-year yields fell and valuations cheapened. Today, he says valuations are high, yields are elevated, and domestic easing is shallow to offset a global drag. He says they have downgraded BFSI to underweight, given rising MSME stress and deflationary dynamics, while they have upgraded IT to an overweight owing to low relative valuations and earnings gap. Nuvama, of course, has been taking a more cautious view of the market, and that's the call which resonates in Pratik's view as well.